So when you take medicine or all kinds of products, even when you just simply drink water, you may not realize that there are companies that make the ingredients and make the systems that make sure the stuff goes into the things we use every day, safe and easy to use. One of those companies is Waters. And the CEO, Dr. Udit Batra, is joining us now to talk about that, but also some of the things coming down the pike that we should pay attention to. And first, congratulations. You've turned this company around in the most recent earnings report. Can you give us a little sample about what you've been able to do in the last couple of quarters to get the company to where it is? I believe your market cap has doubled in in roughly 3 or 4 quarters.
Yeah, thank you, Adam, for having us. Really pleased to be here. It's been about 13 or 14 months since I had the opportunity to join Waters, and indeed, right around that time, our share price was roughly around 180, 190, and you can see it's roughly 340 or 350 today. So we're very good. We're very pleased with the investors' confidence in what we're doing. And we orchestrated, I would say, a three-pronged transformation plan. When I arrived at the company, I found one that was deeply steeped in innovation, really close to customers, but had started to lose a bit of market share because of lack of commercial focus and operational excellence. So we instituted a three-pronged plan. Number one, get our commercial momentum back. Second, we said, look, we need to get a culture of focus, of urgency and accountability back in the system. And third, turn our attention to finding even faster avenues for growth. And on the commercial side, for the first sort of 9 months of the year to date, we've grown in excess of 20% organically. EPS is up close to 40%. And there is broad-based strength across our customer segments. And largest customer segment is pharmaceuticals, seeing nice growth there, almost 20%. Same thing for industrials, which is our next sort of customer segment. Geographically, again, very broad-based strength. India growing 40%, China 30% year to date, US and Europe almost 20%. And then across our portfolio, we have instruments, as you mentioned in your introduction, that are used to analyze virtually anything you consume, and consumables that go along with them. And both those product segments have been growing double digits even for the quarter, but year to date doing even better. And that starts to reflect on the confidence that our investors have in us. Now our attention is squarely turned to what's next.
Yeah. Before we get to what's next, let's just drill down into what has been working, because how much of it do you think is directly driven in part by some of the COVID-19 tailwinds that we've seen throughout the industry?
Yeah, and I think that's an excellent question, Shauna. Look, while we have been helping our customers with vaccines and with therapeutics for COVID-19, from a commercial standpoint, it has little benefit. It has given us little benefit in our sales growth. So it's largely our base business that has grown through the pandemic, and it is a result of two things. One, the transformation, and second, new products that we've introduced and new initiatives that we've introduced. So from a revenue perspective, rather little impact of COVID-19, but I'd say there's an ancillary benefit. So during the pandemic, we worked with the UK government to develop an analytical test and a diagnostic test that could be an alternative to PCR using our LC-MS technology. We showed that it's equally sensitive and selective and has fewer false positives. So that was a test case. It's available as a research use only kit now. And that allows us to take the technology now into oncology. And so we feel blessed to have had the opportunity to work on it. Now, it's not made it into the mainstream as an alternative to PCR or augmented to PCR, yet it's a significant benefit to our pipeline going forward, because we're going to turn that expertise towards oncology, towards endocrinology, and introduce it as a diagnostic test over the next several years.
When you talk about what's next, one of the things that I think investors might be curious to hear is the impact, if it should get through Congress, efforts to allow Medicare and Medicaid to negotiate prescription prices. I realize that you're not the company that makes perhaps the prescription, the old ad line, I think it was BASF, you make it better, because you're making sure the ingredients are pure. What's the impact on you if those pharmaceutical companies are going to be constrained in their ability to charge?
So, Sean, excellent question. Look, we are very well placed in and strongly placed in what is called QA/QC, so quality assurance and quality control of pharmaceuticals. We're a very small portion of the cost base of pharmaceutical companies. So when and if there is price pressure on our customers, we don't think this is the first place they will go to look for cost control. And so we feel rather well placed where we are, and it's a very sticky sort of business where once you install an instrument and install a consumable, it is usually attached to the drug that you have manufactured, and even more so for biologics. So while we are keenly aware and following that as a pressure to our customers, the last part of the value chain that we serve is a small portion of their overall cost and is rather sticky and is in the regulatory files that they submit for approval. So feel rather well placed where we are today.
Dr. Udit Batra is the CEO at Waters. Thank you for joining us.